right, so I am live on Facebook and YouTube, but I need to check that my audio is actually working. I actually got started late today because the my mic was acting up. Very, very strange. So just give me a second here. And the market opened, and you are looking at my S&P position. I got in at the 3,500 even, and you're about to either see me get stopped out and go short, or keep going long. Right? It's one of those things where I don't really care what happens either way, because I'm ready for it, both ways. So the private group that I am supposed to be able to broadcast to is not actually letting me broadcast there anymore. So if you're part of that group, and if you're watching, you know who you are. You're gonna have to find me on YouTube because I am not able to broadcast to that group anymore. I don't know why. So you're looking at the S&P right now. You're looking at the daily. You're looking at the daily chart. I took a shot at the 3,500, and we'll see what happens here. I have a stop half a quarter down, and we'll see what happens here. You can see that with the sell stop, you see that there's two contracts there. So as soon as I get stopped out for this long position, it'll put me in the short position. And I do think that if it's going to break below today's low, again, this is the daily, then there's no room to keep it up. There's nothing really propping it up anymore. And so I do think we can make it all the way down to at least this quarter, maybe another quarter. I don't know. That's one position that I'm holding today. But really what we're looking at, today is the last trading day of the month. Technically, it's not really over because it's only 6 p.m. And technically, it depends on how you measure trading days, right? Regular trading hours are over and the month technically is over. Let's see how TradingView measures it. Yeah, see, you can see that the monthly candle for August is over. And as of right now, we are starting a new monthly candle. So technically, we are in the next month, even though right now it's still August 31st. It's not September yet. Depends how you want to think about it. So for me, as I said last week, I had, 2 weeks ago, I had the worst trading week of my entire life. Hands down, bar none. It was like one of the worst emotional roller coasters, even though the loss was not, I didn't blow up my account or anything, right? But like for me, the pain, the mental like anguish and like the emotional pain was at such a high level. And looking back on it now that I'm kind of over it now, it is actually probably a healthy thing that a loss of so I lost like 10% of my account. So like a 10% drawdown over the week hurt me so badly because if it was one of those things where like, I allow like 10% loss of my entire account is within my comfort zone, then it's something that I'm going to allow to have happen way more often, right? So it's not going to prompt a change. And as humans, traders are humans, right? Unless you're doing AI trading or computerized algorithmic trading, which I also do, right? I do that with bigger money. And we can talk about how that's been going in a different video. I am gonna do a different video because I have an announcement to make, but that is a separate video. So I will be going live twice today to make that announcement. Just FYI. But in the context of day trading, day trading, the way that I do it anyway, is manual. It's my own skill and my whole. It's my commitment to take this skill and harness it over however many years it takes. This is something that I do plan on doing for a long time, which is why I am like I do consider myself as like doing this for life, like for decades. You know, who knows what I'm gonna be, where I'm gonna be at, where my mind's gonna be at, where my life's gonna be at in like 10 years from now, 20 years from now. No one really can really predict that, but I do. Provided that I am, still, able-bodied and all that good stuff, in good health, I do plan on staying in the game because I think this skill is something that compounds and it's very rewarding the longer you stay in it, provided that you don't blow up. It's very, very rewarding. So, to me, um, this is one of those things where like I'm gonna stay in it until I can outperform my own AI because that's more for long-term investments, and I want to be able to outperform it by like that's kind of the score to beat for me personally. This month wasn't that at all because this month was a negative month for sure, and that sucks. Um, it does not feel good at all to do that, but like it's more important to focus on what I learned from it. And what I learned from it is that, like if the worst I'm going to experience is a um if like the worst trading week of my life stays at a um minus 10%, is it's actually that's actually not too bad, right? That's actually way better than people blowing up their accounts and stuff, which is something close to like I would say it depends how you measure people blowing up their accounts, right? I would say that if you lose half your money, you've blown up your account. That's my threshold, but then again, people don't like some people go all the way until they lose 90% of their money, right? So it's like how do you measure that? So for me, if you lose even like for me, even losing 10%, I had to change up my strategy and change up my game and make adjustments. Losing 20% or even like 30, 40, 50% means that I really feel like you either have to move on to a different um, platform, like a different security, or put more money in and hit the reset button and start over because you can't keep taking the same amount of risk with only half the capital. I don't know any scenario where that actually works. But anyway, today is one of those days where we're just going to recap the month. You can see that, I'm going to go with the monthly candles. And you can see I took a lot of trades on the S&P. S&P is kind of my bread and butter, right? And so just think about it like this, right? If I just took, 2 or 3 trades from the beginning of the month, like down here, and just waited the entire month, right? With my stop, near, let's say, the white line, I'd have, like this alone, this is a 200 pip move from this red line to this red line, the 3,500, which is all-time highs. That's, let's see, that's $1,000 right there, right? So like, that's half my goal right there. So you can see, obviously hindsight is 2020. Who knew that we were going to break above all-time highs, blah, blah, blah. There's all this other stuff that you can think of. But my point here is that the money is in the longer term trades and the sustainability is in the longer term trades too. So like I want to move away from day trading on a daily intraday, to be specific. I want to move away from intraday trading as quickly as possible because that's not the kind of life that I want to live. I don't want to be stuck looking at charts all day every day. I want to set stuff up and move away and just let it run. Swing trades, days, weeks, maybe months. I have not held anything for over, I think the longest I ever held a trade was in Forex, and that was like 3, maybe 4 weeks, maybe a month, right? I don't usually like to, I don't usually like to hold things for like over a month. Although I do think that should be part of the game plan. So anything I hold for a month or longer is in my algorithmic computerized account, which has way more than 5,000, right? So for me, this is where like I do believe that I need to make the adjustment going forward to look at longer term trades instead of intraday trades. And there might be less and less to talk about on these kinds of vlogs, which, I mean, at some point this might turn into, like, instead of a daily vlog, it might turn into more of like a weekly vlog, because there's only like a handful of trades to even talk about. There's no point in talking about it every day. I'd just be saying the same thing every day, right? So that is where I want to end up at. Let's take a look at other positions that I'm holding here. Same thing with the British pound. You can see I took a lot of shots at the British pound, and right now it is working for me. And you can see that I've taken. Man, I wish I had like held the. See, this is what I'm talking about. Like, I wish, if you look at the monthly, it looks very obvious. Just, yeah, I bought it. I did buy it at the 3,000, right? Just hold it for over a month, and you'd make whatever, right? So that is that's kind of where I want to be at. Although, like, I did like the idea of, higher volume reps. That's the reason I started this day trading vlog to begin with, is that I wanted something to do every single day, because I wanted the consistency. I wanted to, show up, and as a, not a professional, because I'm not at that level, but, think of it and treat it as if I am a professional, and treat it, with that much, treat it that seriously, right? That's really what I was looking for. So now that I have that, I do have, like, like a good sample size of, approximately 3 months, 2.5 months to 3 months that I've been doing this. And I have the, like, you can look at it as, like, what did I learn from approximately, let's just say 3. What did I learn from 3 months of day trading, and taking the opening range, taking the news breakouts, all those different moves, taking some other other professionals' picks and whatnot. What I learned is that, what works best for me, and I'm not saying this is going to work best for anybody. I'm not an advisor. I'm not recommending anything. Just want to be super clear about that. What works best for me is the quarters, because it's simple. It's like the thing that I realized is that in trading, and I think like in many other areas of life or business or whatever, you gotta know what is, like, congruent with with who you are, and your identity as a trader. So some people are going to be really, really active, high volume, taking 30, 40 trades a day, or even at a higher level, hundreds and hundreds of trades a day. Some people are going to be like that because they need that action. It's just who they are. That is not who I am. That's what I realized. Right, I gave it a shot. I got some reps in, and it's for me, it's very difficult to show up with a level of seriousness if I need to be there that often, that much. For me, I'd rather it makes more sense to me, and feels more comfortable, and I feel way more confident doing the swing trading thing, and just, I have the lines, I know the numbers, take the shots, and rinse and repeat. Like, you'll see, I'm gonna start to do I already started to do more of it, but you'll see me really scale into this even more, and there will probably be fewer trades to talk about on a daily basis going forward, honestly. Like in the NASDAQ, for example, like, this NASDAQ today had a lot of help. Tesla and Apple split, and those are, like, a leader. Like, Apple alone is a big leader of the NASDAQ. So you're gonna have that kind of help of people, like, going nuts, especially like novice investors who are like, oh my god, Tesla and Apple is so cheap now, 4-way split, 5-way split, whatever, like all the splitting that happened. That I think that most traders are aware of, but it doesn't affect us that much, except that it just brings in a lot of novices to that that move. I don't even know that novices even move the market that much. They might move a couple of candles, but they don't move the market for very long. So right at the open, let's go down to the 30-minute just to be clear. Like, you can see that there's definite, like this even thousand, right? This 12,000 held. You can argue that there's a zone here and whatnot. Yeah, I guess. Although that looks like a weak zone. Like, why would you not look at this zone? Like for me, the quarters just work better, and the probability, right? Ultimately, it comes down to three things. Trading comes down to three things: um, risk, reward, probability, right? RRP or PRR or RPR, however you want to think about it. Risk, reward, probability. And the probability of the quarters is equally high as what I'm finding as all the other stuff that requires more work. So if I have the same probability, but I can do it in less work, then I'm definitely going to do that because that's part of who I am, right? I am not the kind of person that needs to that wants to reduce my risk per trade, and every trade has to be the minimum kind of risk as possible, and I want the smallest, and I want to zoom in, and I want to dissect each trade. I need like a million different indicators to line up exactly right and whatnot. That's not me. I do look for confluence. We did the trading plan last week, and I do want to see more than one reason to get into a trade. I don't want to. I mean, the biggest reason, the most obvious reason is it approaching a quarter? The green lines represent strong ones, and the red lines represent the strongest, right? Definitely the strongest places that either trend is going to reverse or it's going to continue to support or what have you, right? So I'm going to look for that number one. I'm going to look for RSI number two. And I'm going to tell you a little quick story about how RSI kind of screwed me over, even though like it was part of my rules and part of my trading plan. But I was like, oh, like I'm gonna give you a story about that in a second. This morning, and I lost an unnecessary amount of money. And then third, I'm also going to be looking for like, yeah, do I see a zone here that supports it on a high time frame? Do I see divergence? Actually, I would go with divergence before a zone, to be honest with you. Although a lot of people, a lot of traders that I know will argue that zones are the most important. Zones are the highest probability because you can reduce risk. But I like the problem I have with spotting zones is that it's highly subjective, no matter what you say, right? Like there's just there's too many ways you can make exceptions to that rule, right? Because it's too complicated of a process to find, right? And I hate complications. I like simple. I like the fact that anything 000 is a strong price, right? I like that. So to me, like I find this, and I like the more you like, and that's to be perfectly clear, like that's a dangerous place to be as well. If you fall in love with something a little too much, that is that is getting into a confirmation bias kind of a area, and that's not. I got stopped out on the long for the S&P, right? I just saw that, and now I'm in a short. So I want to protect this now. I really hope it doesn't bounce back up, because that would just annoy me. I would get stopped out twice then. But I'm gonna make this into a 30 above the 500, and we'll go for a full quarter. Okay, for the full 125. It's a 2-to-1, not the best. But I'm gonna take a shot at it all the way down to here. As soon as that thing, what? Okay. I entered the numbers wrong. Oh no! I did. Oh no! It's because I'm taking the shot in the middle of the quarter. That's why. Well, I still want to aim for the 3450. So I'm aiming for a little bit more than a quarter. We'll see. You're getting to. I mean, this is one benefit of me coming on live late, is that you get to see me do live stuff. It for now it's working. Let's, knock on wood and hope it continues to go down, at least down to 3450. So once it hits, like, I want to know when it hits the like the 70-ish area. Actually, you know what? I want to know when it breaks this level of support. Cuz then I might move my stop. Maybe. Okay. So this is I'm on the free trial of TradingView, and that's why I'm able to add these alerts. It's something that I have to pay for the privilege of using, and I do really like it. But I don't know which plan of TradingView I'm going to sign up for yet, because it's only really worth it if I'm getting involved in spread trading, which I have not done yet at all. It's something that's like on the list for me to do. That's why, honestly, like, big picture, guys, I only got into futures. I moved away from Forex because I heard about futures spread trading and how high probability it was. But futures spread trades, like, you have no business really learning how to do that unless you know how to trade, just like, I don't know, I forget what the word is, but unless you can just trade like directional, you have no business trading spreads, right? Like, so for me, I definitely understand how futures works, and like, I'm annoyed at the margin requirements sometimes, but that actually goes away with futures spread trading. So I do want to get into that, but like, I can't trade spreads on TradingView. So there's a lot of like technical like obstacles in my way to get to really where I want to be at. Right? I don't know if I ever shared that here before, because here, like, for entertainment purposes, you probably just want to see me win or lose money, right? That's probably where you're going to be entertained. But on a personal note, like, that is my longer term goal. Like, I want to be able to, like, the whole point of this is for me to be able to get into spread trading. And what I found is that, like, number one, I have platform challenges. Number two, I have margin issues as well, because with the majority of spread trades, it's higher probability and lower margin requirement, but like, very few high probability spread trades actually involve micro-sized contracts. So there's a lot of so I need a bigger account, bottom line, right? So that's difficult for me as well. So there's a lot of things, like, in the works that I am just in. It's kind of a slow work in progress, and I have not been quick about, like, learning a new platform, because there's like another project that I'm working on that I'm going to talk about later in another video, in another live, right? So I already talked about that. I already dropped a hint about that. So I am holding on to a couple of positions here. If the S&P continues to drop down, that's probably going to work against my currency trades as well. So I don't know. I'm a little bit betting against myself by being in all of these things at once. I don't know how that's going to play out. So right now, I do have my stops high enough on the British pound and the Australian dollar, high enough that, like, I'm guaranteed some form of profit. I do want it to be more than this. I don't want it to come all the way down, but I already took a shot at I already took a shot, stacking a contract at the 325 here, and I don't really want to. I really can't make a move, because it'd just be like kind of a waste until I get to see. Until I see this, until I get to see 34.25. I'll put this up here. I'll take one off at 34.25. And then probably also move my stop up to 3400 for the remaining two. And then see if I want to, and then, like, wait and see if I want to add at 34.25, because I'm playing into this defense right here. The red line. This price is wrong. It's off by a tick. So let me just clean that up. Perfect. Okay. All right. Same idea with the euro. The euro I actually just took today, and I'm playing right into this. So this is a 3-to-1 max. I can't stack. I can't do anything. And the Australia, there's a little bit more room. I didn't draw the lines, but it would be right here at the 41, 20, 40, 24, 20, 74, 25. God, I can't talk. All right, so I'm gonna set one up to take a shot there. To take some profit off there. And so let me just wrap up with a story about how quarters works, but divergence, looking for RSI and divergence actually worked against me today. I actually did get a little bit of love from crude oil finally, but only 1/4 because I sold myself short because I took the opening range, which was near this quarter, which is good. You know, I took the shot right there. And I like the fact that it was, a modest move. I did not take the long. I only took the short, which was good. You know, it was I reduced the risk by taking one less trade. Breakout trades are risky to begin with. So but like once it got to here, and started bouncing back, I just moved my stop up to just 1/4. And which was already it was like 1.5 to 1 anyway, but you can see that there was definitely room to go down. But for me, I just got a little bit timid because of the defense of like this choppiness, you know. If anything, I probably should have held, like originally, if I was following pure quarters rules, I'd still be in the trade in profit and aiming for this red line. But on an opening range trade, like I don't know, like even though it was a quarters trade, but mentally to me it was an opening range trade, and my risk was lower, so it was one of those things that like kind of messed with my rules. That's why I'm saying like maybe I only take opening ranges if it's near a quarter in momentum. You know what I mean? I'm still pissed that last week that I got a margin call and it closed out my position that would have definitely made it to my $500 move. Right? It's stupid. Like, I don't know. I have to figure that out. Right? It's a stupid reason to get to lose out on money, is a margin call that liquidates your position like down here or wherever the hell it was, right? And cuts your move short. Sucks. Stupid. Okay, so that's the S&P. So the story that I wanted to end with is right here. So the opening range on Nat Gas opened so close to the 500, right? It was like right here, right? This is the opening range right here. It's like right below, right? Oops, that's not right. So there it is. So that's the opening range. I'm like, oh man, like I feel like this 500 area is going to bounce the price back up because of the strong move that it had here, and it just touched, like it was barely tested. Technically this is a test and it did spring up like crazy, but it was like not that, like I feel like it's still kind of fresh. It has another bounce in it, right? This level, right? This 500 level. And but the thing is, I saw that the RSI was so low, right? And I was like, you know what? I want to watch for the RSI to slow down like it did like this right here. Like it kind of like slowed down. You saw that approach the red line and slow down, and then take a nice little gentle bounce off the red line, and then move up to the next quarter, which is up here, and then it extended to the next quarter up here, right? I don't know that I would have aimed for that the entire thing, but I would have definitely looked at for a 3-to-1 here, right? This is like if I held it for this long, it's like a 7-to-1, but who knows? I don't know that I would have been able to catch that, right? So same thing here, but I didn't want to set it and forget it. So what I ended up doing was I ended up keeping I ended up taking a getting back in on the retest of the stupid, opening range. I don't know why I did that, right? It's like I don't know why I'm like committed to trying an opening range on a daily basis, even though it like doesn't really work for me as well as my primary strategy, which is quarters. So that's one area where like I saw this and I still missed it because I tried to take the opening range. And if anything, I could have taken this for a 1-to-1 down here and then set up a, set up a reversal to take it at there. I could have done that, and I would have been in both ways. And that alone probably would have brought me to my break-even point. There was a lot of ways that I could have broken even with different things, but I just, I didn't take any, I didn't take a lot of shots, right? That's really what it comes down to. So that's it for today's video. You're getting to see a little bit of my adjustments moving forward, and you'll get to hear more about it as we move along. You're going to see more quarters and less of anything else. I'm still going to take news breakouts because that's even though it's risky, it's every week, and I'm still going to look at daily openings, but I'm not gonna take it as seriously as that's not gonna be as high priority. I'm only gonna look for the quality ones, and this one was like I had the right read, but I placed the wrong move. So it's like that doesn't matter. It doesn't matter that I was right and I had the right idea. What matters is what was entered, right? That's the only thing that matters. So so that's it for today. And keep an eye out for like a modified strategy a little bit going forward. More quarters focused, more longer term focused, less day trading and intraday focused. All right, so that's it. Stay tuned. I'm going to take a little bit of a water break here and then set up for my next broadcast, which is about something completely other than trading. And you get to stay tuned. I'm not going to drop any more hints about that. Okay.